The Chief Economic Advisor, CEA, Anantha Nageswaran has forecast India's GDP growth to be between 6.5% and 7.5% in FY. He has cited strong growth momentum in investments and efficiency gains from the digital transformation in the economy. Let's see what he means by that. First, he said that the GDP growth of 7.2% in FY23 could be revised upwards during data revisions. He based this on the indicators such as domestic industry, services, GST collections, and bank credit growth. He also said that the growth in FY23 was stronger than expected, especially in the fourth quarter. Second, he said that India can grow for a longer period of time without running into overheating problems. He attributed this to the sound economic policies, the infrastructure built in the last 8 years, and the digitization gains. He said that India can avoid the problems of inflation, imports, and currency appreciation that it faced in the past when it grew fast. Third, he said that India can achieve higher growth potential with additional reforms. He mentioned skilling, factor market reforms, land and power reforms as some of the areas that can boost growth. He said that with these reforms, India can grow up to 7.5% or even 8% till so. These are the reasons why CEA Nageswaran is optimistic about India's GDP growth in FY24 and beyond. He believes that India can grow at a sustained and stable pace without compromising on sustainability. The CEA has also said that the GDP growth for FY23, which was reported at 7.2%, could be revised upwards during data revisions. This means that the economy performed better than expected last year. He also said that the risks to the growth forecast are now more evenly balanced than a few months ago, when downside risks were greater. This means that there are fewer factors that could derail the growth momentum in the current year. What are the reasons for this optimism? The CEA cited 3 main factors: strong growth in investments, efficiency gains from digital transformation, and sound economic policies. He said that the private sector is poised to attain stronger investment growth following the strengthening of corporate and bank balance sheets. He also said that the digital transformation of the economy has improved productivity and innovation. And he said that the government has increased investments on the ground, rather than revenue expenditure, which is the best way to develop the economy. The CEA also said that India can grow for a prolonged period without running into overheating problems. He said that India has the potential to grow steadily between 6.5% to 7% till 2030 without any additional reforms. And if more reforms are done, especially on skilling, factor market reforms, and land and power reforms, India can grow up to 7.5% or even 8%. He said that this is possible because of the infrastructure built in the last 8 years and the sound economic policies followed by the government. So, according to the CEA, India's GDP growth could shatter expectations in FY24 and beyond. He said that India is on track to become a $5 trillion economy by 2028 to 29 and a $10 trillion economy by 2035. He also said that maintaining economic growth while ensuring sustainability is important, and that India is committed to achieving its climate goals. India's GDP growth has been impressive in the last fiscal year, clocking 7.2% despite the pandemic challenges. But can this momentum be sustained in the current year and beyond? That's what we will explore in this video. The Chief Economic Advisor, Anantha Nageswaran, has expressed optimism that India can grow for a prolonged period without running into overheating problems because of its sound economic policies, the infrastructure built in the last 8 years, and digitization gains. What are overheating problems? They are situations when the economy grows too fast and creates inflationary pressures, trade deficits, currency appreciation, and financial instability. India has faced such problems in the past, after growing strongly for a few years. But this time, Nageswaran says, things are different. He says that India has followed sound economic policies that have boosted investments, especially in infrastructure and digital transformation. These investments have increased the productive capacity of the economy and improved efficiency. He also says that India has a large domestic market and a young population that can support consumption demand. He adds that India has diversified its export markets and products, reducing its dependence on any single region or sector. He forecasts that India can grow at 6.5 to 7% till 2030 without any additional reforms or overheating risk. With more reforms, such as in land, labor and power sectors, he says that growth can accelerate to 7.5 to 8% or even higher. He also hints that the GDP growth for FY23 could be revised upwards during data revisions, as there is a strong momentum in the economy. He cites indicators such as domestic industry, services, GST collections, and bank credit growth as evidence of this momentum. So, India seems to be on track to achieve its potential growth rate and become a $5 trillion economy. By this is good news for all of us who want to see India prosper and progress.